Hello, hello, hello. Wow, I don't look so good in that. Ooh, let me see. Wow, that is. Ooh, what is going on here? Wow, something's up with the camera. Huh. I'll have to take a look at that again. I don't know what's going on. All right, welcome. I'm just waiting for Bob to come on. So if you have any questions directly related to the FOMC, he can't be on very long. Those are the only questions I'm taking for him. So, good afternoon, Patrick. Afternoon, Jacob, Daniel, George. Remind me again after Bob's done. Microsoft, hey, AP's World. It was a boring day. The SPY and Q levels were amazing for options trade today. Well, I'm glad they came in handy. Options 22, thank you for being here. Hey, Charles, good evening. Well, I'll give my key levels again. Remember, we also have the biggest OPEX of the year. On Friday, we have ECB and BOE tomorrow, which will affect things because it will affect the dollar. Good evening, Anissa. All right. All right. Let's see. Hey, Ted. Jeez, I just don't look. This is bugging me. Not that I really care about the way I look. I just don't know what happened to my camera. Oh. See how this one looks. See, that one looks much better, but it's still grainy at the bottom. I gotta work on something with the lighting. Yeah, all right. All right. Well, you know what? My camera will just have to look horrible because we're just gonna bring on Bob. We're bringing on
That was
Bob.
quick.
Bob's
That was quick.
here.
Yeah, I'm here.
See, look at this. Look at this. So questions. Powell said under no circumstances they were going to even think to increase their inflation target to 2%. Do you guys believe him on that?
Increase it to 2%.
Or they're going to change it. They're going to.
I mean, they're already at 2%. That's their inflation
No,
target.
his exact. It was something like changing inflation
Increase it
target is
from
not something we're
2%.
thinking about, and it's not something we're going to be thinking about under any circumstances.
Does that increase it from 2%? Because their target's already 2%.
I don't think Panvit worded it very well. They're
Okay,
at
so
2%. He was asked if they were going to deviate from that 2%. Like, are they going to raise it? Their inflation target. And
so they also said about 6 months before they started raising rates, maybe a little longer than that. We're not even thinking about raising rates. So they went from we're not even thinking about to inflation may not be transitory to it's not transitory to 75 basis point rate hike in a little more than a year. So don't worry about that. I mean, look, I might be wrong. My theory is they're going to raise their inflation target because they won't be able to service the debt, watch a deep recession, and at the same time leave their inflation target at 2% and say they're pursuing that target. They won't be able to do all three things. So something has to break. And I suspect that break will be either we think 4% inflation is fine, or we think we're well on our way there, even though we're still at 5%. I mean, it's kind of the same thing to me. So Mohammed Al-Arian actually said they won't publicly say they're moving it, but they'll live with 4 or 5% inflation. That's the way Mohammed Al-Arian put it. So he said they won't admit it, just like they don't admit they want a ton of people to lose their jobs. They just say we need more slack in the labor market, which is the same shit. What else?
well, what are your just real quick? What are your other thoughts about the? I mean, we've been talking about the 50 basis point baked in. Now their dot plot went higher.
Yeah. The main takeaways for me are that 17 of 19 respondents in the SEP, which is the special economic predictions, right? The Fed's economic predictions. 17 of 19 saw the terminal rate above 5%, 5.1%. Okay, so that basically means, so where'd the terminal rate go now? 425 on the high side. So I'm sorry, not the terminal rate, but the current rate is 425
to 4.5.
Yeah, so that means they got to raise it at least another 75 basis points on the low side. So yeah, in order for it to get to 5.1. So the dot plots are pretty consistent with them doing two more rate hikes, probably 25, 25, 50, 25, something like that. So yeah, I think that's crap. So that's number one. Number two, the high prediction of a 2006 rate, I'm sorry, a 2025 rate is 5.6%. The range for next year of rate prediction, 4.9 to 5.6. Does that look like rate cuts to anybody? Now, again,
Oh,
they
two
can
more
pivot.
next year. Here we go.
Yeah, next year, 2023. The range is 4.9 to 5.6. Does that look like rate cuts to anybody? Now, again, these are their predictions. They can change their predictions at the next meeting or the meeting after that. The range in 2024 is 3.1 to 5.6 for the terminal rate. That's still, I mean, we're at 4.25%. So if you got to 3.1%, you're only talking about about 100 basis point rate cut, right? From the 450 basis points they've done so far. Still pretty restrictive. He also said that inflation has not shown enough progress to them. They talked about the PCE, which I've told you guys that the CPI doesn't matter as much anymore. The PCE matters more. Talked about how the PCE month over month was still going up, something we've said to you guys. They were concerned about that. And they also said core inflation on the services side would take a long time to go down. Here's why. Core inflation never goes down on the services side. It never goes down. What happens to it is job losses. The actual wages don't go down. So in totality, fewer people are making the new high wages. He also mentioned wages, said we haven't seen substantial easing of wages yet. And we haven't. People keep looking at prices. Well, what about wages? They continue to go up. And he mentioned food prices. How food prices were a bit of a surprise, which is something I said to you guys after CPI. So those are my major takeaways. I thought this was an extremely hawkish statement because they didn't change the wording in terms of substantial progress or any of that. They didn't change any critical wording. And it was definitely a hawkish press conference, although he wasn't fired up. I mean, he was boring and sleepy. So maybe he doesn't even believe what he's saying anymore. Before Coco asks, I'm still in my long.
Uh,
What else we got?
Bob, did you catch the question about cutting 3 times next year? One of the journalists asked if Powell seemed to be confirmed, but be squishy about it.
I didn't see him confirm rate cuts at all.
I didn't see that at all.
At all. I did see one journalist, and I remember I laughed when she said it. She said, "You seem to be implying increases of 25 basis points going forward. Can you tell us how they're going to be structured, like when they're going to be?" Which I was like, God, you are a 20-year-old idiot. Like he's going to go up there and say, well, let me give you the whole schedule that we're not going to deviate from. We're going to do 25 next month, 25 the month after. Then we'll pause 2 months and 25 more. Oh, my God. I did not see him confirm, and I didn't even see any reporter. I saw a reporter ask about rate cuts being priced in, and that was when he said what Mike said earlier in the live stream about, yeah, we're not looking at rate cuts right now. So I'm not sure where you got that, Daniel. You went from one of the smartest questions yesterday to I think you're confused today.
Next meeting is Fab. How will the various funds take 25% loss for 2022? Is it even a scenario?
I'm not sure what that means, Shashi. Can you clarify that before I have to leave this live stream? I'm not sure what you mean.
Bob, if they're not thinking about rate cuts, what should we think and how to position?
Well, Mike said yesterday everybody's trading the Fed, and that's not the right thing to do. So I think that's sort of your answer, Shashi. You shouldn't be trading the Fed. You should be trading the charts and the price action and then last secondary to all that is the stuff that I talk about, which is the fundamentals.
And
Um, Go ahead, Mike.
and then from options 22, from S&P and comp higher, lower, or flat on market close December 31st from where we are now.
Slightly higher.
Slightly
One of the
higher.
things I liked, or one of the things, I'm sorry, I didn't like it. I found it the most interesting, and it was the most interesting to me. So yields went up and then went down and stayed down. So this morning yields were lower. Then they rallied after the Fed, or I should say during the press conference. Then they fell again. I'm sorry. Okay. Down, then up, then down on the yields. That's what happened. So they were rallying during the press conference and they ended up basically down. Okay. So they ended up where they started. Stocks, right, reacted the right way to me. They were up, then they collapsed, then they came off their lows, but stayed slightly lower. I'm not looking at them now, so I don't know where they're finishing. Yeah, they're still slightly lower. They came off the lows, though. Look at the dollar. The dollar barely went positive during the Fed press conference. It just kept collapsing, though. And that is because of yield differentials. Okay, that's what it is. If you look at, say, the 10-year gilt, okay, the yield was up 8 basis points. The German 10-year, the Bund, up 6 basis points. This is all in yield, okay? The French 10-year, I forget what it's called. It's a bubble. French 10-year up 7 basis points in yield. Italy's, they have their 10-year has initials, but I can't remember. Oh, BTP. The Italian BTP up 13 basis points in yield. Spain up 8 basis points. Portugal up 6 basis points. Netherlands up 6 basis points. 10-year note down 2 basis points. So yield differentials are starting to widen again to where it favors the European and the UK currencies. That to me was the most interesting thing because the dollar didn't turn around. So the bond market does not believe Jerome Powell at all. At all. Stocks believe him more. The dollar believes him even more than that.
Fine. Let's see. Royal pause. I'll take that. I expect after it's not the jobs numbers on Friday. We have jobs numbers tomorrow. Big thing on Friday is we have unemployment tomorrow. Big thing on Friday is OPEX. I think the market's freed up after OPEX. This is the biggest OPEX of the year, 3.6 trillion. That's sort of going to be an anchor going into the end of the week. The Fed is hawkish. When will these markets finally tank? Well, or leg down to the next lower level?
Say that again, please.
When will the markets finally turn lower again, essentially?
Oh, shit. I don't know. I'm long. Who asked that?
Paul, I mean, I'm expecting sometime next year.
Yeah, I think mid first quarter, late first quarter, early second quarter, we could tighten that up as we get closer. But that's when I think it's going to be. And you'll get individual falls here and there that Coco asks me if I'm still in my longs during those days, days like today. So, my prediction, and I think Mike agrees with me, is that sometime late first quarter, early second quarter, you'll see a move lower. But the price action has to confirm it.
So, all right. Well, he says, "Wow, Bob, you're very optimistic."
Who said that, Paul?
Paul.
I mean, I just think that's the way it's going to set up because we need earnings to come out. And this particular, toward the beginning of the first quarter, we're going to get fourth quarter earnings, which have holiday season in them, so they may not be as bad. But the next year, when there's no holiday bump, toward the end of the first quarter, when EPS estimates start coming down, they've already been coming down. When the Fed starts staring at an unserviceable debt in the face, while we still have 5.6% inflation, that's when it starts to get pessimistic for the equity markets. Right now, the markets are comfortable with what the Fed is doing. I think they proved that by coming off the lows today. I really do. Just like yesterday, they came off the highs. The market's kind of comfortable where we're at. until we get more news. So,
Yeah. What was
yeah,
the? What's interesting? The last rate. What date was the last rate hike? Do you remember the
off
last
the top of my
one?
head, I don't, but it was all the way back in late October, wasn't it?
Yeah, I'm trying to. It
I think
was
it was,
no, it was November.
was it November? Then it was early November.
Let's see. I'll have to look that up. Does anybody have the? Oh, here it was, 2nd of November.
Yeah, early
Why I was
November.
wondering, where do we close? All right, 2nd of November, right here. So, I mean, we're higher since the 2nd of November, but not a lot. I
Right.
mean, it's we've gone a whole bunch up and down, and I still think we could easily rally a bit more into the end of the year. But I have a key line in the sand, and this is what's so funny to me. And we'll let you go, Bob. But
Yeah.
it's like everybody wants to. Do I buy or sell today? Well, what's if I said my line in the sand is 39.11 area, 39.12 area. We get a close below there. Why do I have to worry about selling here? I can sell it just a little bit lower with a lot higher probabilities. So it's like everybody
That's what I
wants to know it.
completely, yeah, that's what I completely despise about people who are like, they call me up and they go, "Hey, things have fallen a lot. Should I buy it?" I got a lot of those calls in September. Things have fallen quite a bit. Should I buy it? I'm like, well, they could fall more. And over the next couple of days, they're like, I should have bought it. And then we collapse back down, to the October lows. So it is way better to get on a train. If you're trying to go south, get on a train that's headed south. Don't get on one that's headed north and then ride it all the way north till it turns around and starts heading south just because you want a good seat. What if it crashes? Now I'm just making shit up. Um, yeah, I will see you guys tomorrow after. Uh, who was it? It was Shashi. If you think of the correct way to word the question, Shashi, I'm not sure what you're saying in that. We could talk about it tomorrow, or put it in the Discord, and I can give Mike the answer for tomorrow morning or something. I'm just not sure what you're
Okay.
asking.
All right, great,
All right,
Bob.
guys.
Have a good TV
Cheers,
spot.
everybody.
Bye.
See you.
All right. Gray Mike is back. Gray Man. All right. Well, so let's see here. By the way, where we're sitting, this is interesting for Feb. We've got. Am I on current? That can't be right. Hold on. Wait, something is very off on the Fed Watch tool with current. Let's just see. They've just been updating it after the close, so I wanted to show something, but it might not be able to, because now this is pricing in a. All right, something's off with their system, because right now, has to still be. They didn't update it. This was today. This was actually, it says 1st of February. It's December, so everything shifted for some reason. But what I was going to show is we're still expected to climb and then possibly cut next November via the Fed Watch tool. Tomorrow, let me just catch up with stuff. Tomorrow, the key things, we have Bank of England interest rate decision. Forecast at 50 basis points, 6 a.m. Central Time, 7 a.m. Eastern. And then an hour, 15 minutes later, we have the ECB interest rate decision, a 50 basis point expected. Then, 15 minutes after that, at 7:30 Central, we have retail sales, which is going to be pretty. I think that's going to overshadow anything with initial or continuing jobless claims. Unless one of these numbers is way different than expected, I think retail sales plays a lot more weight. It's forecast to contract. All right. Then we have some minor things like Empire State Manufacturing Index. Philly prices paid. Do not ignore that. Business conditions will be interesting. Then at, again, 7:45 Central, 8:45 Eastern, we have ECB press conference. And these things can move our markets pretty well, especially if it's not what's expected. 8:15, we have industrial production. Minor, but still important. 9, business inventories, and then that's about it. And then the big thing is OpEx on Friday. Your market map, Apple down a bit. We'll take a look. I saw the question about Microsoft. A slight rotation into healthcare, which is, I know it's healthcare, but it's considered consumer defensive. I think that was a little premature, even though I love the healthcare sector. The sector, you see, healthcare was the only, healthcare and consumer defensive were the only things that were really up today. We already did that. Fear and greed still in greed mode. Here's what I'm watching for, really. The breakout level, you know, is 4,095 to 4,100. We start breaking above there. I'm in short-term bullish mode, and short-term could very well, after Friday, short-term can last through the end of the year potentially. We get there, I would be a choppy to upwards bias. I can't turn overly bearish until we get below 39.1125, especially on a closing basis. Not only is that the key major support level that was retested, but it would take us below all the key moving averages, and it would have lost the 200. Remember, we have the gamma wall at 4,000. It's the major gamma going into Friday and the major option strike for a potential pin. So as long as we stay between 39.11 and 4K, it's no man's land for me. It would only be very short-term moves. Above 4,100, resumptive up move potentially through year end. Below 39.1125 on a closing basis, potentially some breakdown move, because that would really break a lot of key levels. That would be the technical damage. If we sit in this range, it's just very short-term scalpy stuff. There is no direction. Also, remember, we've been in. Let's just take this 39.11 and, 4,100 as the key lines in the sand on closing bases, because there have not been any closes above or below those levels. We've gone a whole lot of nowhere. A slight upward bias, but a whole lot of nowhere since breaking above 3,900. Okay? Yes, we are up from 3,900, but we've gone a whole lot of nowhere. So you don't have to, this is where I tend to get a little, right now to the close, we're up 3%. Big friggin' deal. Okay, so don't get caught off guard that we can go up, we can go down, but this is a slight upward biased, choppy trend overall. Cycles are closing in on the topping area. Going to get real interesting, I think, after OpEx, where we get some more clarity. Okay, so this is what I'm saying. I don't need to worry about, do I sell here? Well, you know what? I don't mind selling down here if the probability shifts up. Do I need to buy here? I don't mind buying a bit higher. The probabilities change. Right now, it's in no man's land. So I've given you my lines in the sand, especially for after op X. Unless we get some other pattern to develop, and right now we don't have a fantastic pattern. I hope that's clear. So, I mean, here we're still against, besides that spike from yesterday with the CPI readings, we're still on a closing basis below the channel line. You know, you start getting back above this 4,100 on a closing basis, you're closing above the channel line, especially on a weekly. So if we do break up, I'll be real interested if Friday afternoon we're closing above 4,100. That's a pretty strong continued bullish signal. And my next major target would be 42.62 potentially. Minor target would be back to 41.80, 41.86. I don't know if I can get any clearer. We should see some selling in. It will be interesting. There's no guarantee of a Santa rally. That's why I either need the breakout or breakdown play at this point. So, Tesla real quick. Come on. There we go. Tesla's an interesting, another close below the, let me get to the daily. We'll find out if we're going to get some Form 4s from Elon to see if he's been any of this selling. Other than that, you know, the market breaks at the upside. You could see a tiny corrective rally in here in Tesla. Other than that, we're essentially hit the next major target. The next key area below that is down to 148.38. By the way, the little double is you can keep it, but that would only be on a 4-hour closing basis. It would be a longer term. Why? Because it's stair stepping lower on the 1 hour, but it just means a shift up in time frame. So that's if we continue to break down tomorrow and Friday, 148.38. On any rally, it's about 168 to about 169.70 for the key resistance. Let me just jump. I know we had Microsoft earlier. Microsoft, the key area I'm watching since we've paused against the 200 and we're still holding. The support levels have shifted up. You can see it right here. Little support window right here. So the major line in the sand for me is about 244. But as long as we keep holding here, I'm watching for the double to continue to play out. All right, well, after the first pause of the 200. If we pull back below, we still have a little minor gap fill if these levels break to take us back to the rising rotation zone. That's why I'm not overly concerned from the bullish perspective on Microsoft until we get below 244. And technically the stop for the double is well below that if you're using just the conservative stop levels. On the 1 hour, do you have a potential double? Yes, you do. Now, where would that take it back to on the daily? Right to the key area, the 244 area. So, that's the only thing. Would that make me say this thing's going back to 220? Not anywhere close yet. So that's where that sits with Microsoft. NASDAQ. Again, this was a whole lot of nothing day. I mean, look at the NASDAQ. Since Friday the 11th, it's virtually gone nowhere. Yeah, it's been up and down, but you're slightly higher close than Friday the 11th. Even from the CPI Thursday, how much are we up from there on a closing basis? 2%. Nothing. Nothing. Not up going on. My lines in the sand on here. If you want the round numbers, it's about 4,000 to the downside, 11,400 to the downside. On a closing basis, I need a close above 12,100. A close above 12,100. We still have the bullish pattern in place. Stop raise. Above 12,100, I target again this area, this 12,350, and then the 200, 12,450. But that's now based off where we are. We're in consolidation. Break above 12,100. Those are the targets I am utilizing higher. Break below 11,400, 11,180. Close below that would take me to a retest of the low area. But right now, if you had to have me guess, I'd say we still have a slight upwards bias and we have a bullish pattern still in play. That's invalidated from the major technical damage if we close below 11,400 though. When do I expect it to hit lows again? Well, if it holds up now, it'd be some point possibly during next earnings season that starts mid-January. But that's not for necessarily new lows. You know, in all the stuff I've researched and worked with, the hardest thing is exact timing. Not the levels it will get to. It's how long it takes to get to levels. That is the least reliable thing I've found in all of system testing, besides very short-term systems. Longer-term systems have a notoriously bad track record, not of hitting the levels, but the time from both bullish and bearish cases it takes to get to those levels. It's incredibly imprecise. If I had an exact timing model, and that's why sometimes the option market can be so lucrative, because you can be right on the target, wrong on the duration, and as an option buyer, it's not lucrative, but as an option seller, it can be very lucrative because there's a lot of room. It's what I just pointed out. From November 11th to today, we've gone virtually nowhere overall on a closing basis. But we've gone a whole bunch of different areas, you know, on an intraday trading basis, and how much stuff, oh, it's bullish, it's bearish, it's this, it's that, it's that. Look, here's the closing basis. So, those are the levels for the NASDAQ. The Dow key level, roughly 33.5. That's my breakdown level. My closing basis level, 34, just above 34,600, 34,620, 34,616. You can even use a close above today's high if you want to give it a little more room, 34,674. So that's my bullish and bearish case. The Russell has gone virtually nowhere since the end of October. We've gone a whole lot of nowhere. That's just a mess. Notes. Nothing's really changed here. Breakdown level for me is 113.21. Breakout level is 115.13. However, above 115.13, this could be a major potential topping zone. So that's what I'm keeping an eye on there. Dollar index, all the little potential doubles are off the table. No potential doubles. So that's where that sits. The only thing that I will be watching now in the dollar is if we get above about 105.40, roughly. Crude hitting the other side of the rotation zone, even with a huge inventory build numbers today. We rallied. This is actually more bullish with those inventory build numbers. So it's still in trailing stop, and the still key area I'm watching on closing basis is 78.37, trailing after the percent B buy. That is it. So keeping an eye, this is almost just a sideways pattern, but short term from a short term trail, it's below 76.91. That's where we stand with some of the major stuff, just peeking in. Gold again today, whole lot of nothing. Copper, nothing's changed from what I talked about this morning. I just have to update a couple levels. Nothing's changed. Still keeping a key eye. Watch this 200. You start getting momentum above that 200, you could see a pretty quick run to that $4 and the 405. There's a lot going on with the there's somebody at the door with the dog. Sorry about that. Hey, Christo. How are you doing? All right. With that. No, it's the camera and I'm tired. I'm just tired and I'm dealing with a lot of stuff that has to go on. Lots of end of year stuff, lots of stuff just built up. And I'm just very tired. So that's where we sit. We'll do more of an analysis tomorrow. But remember also, like Microsoft pretty much has the best patterns. Look at Apple. Favorite triangle pattern. Yay. But look at Apple. End of September, it's gone nowhere. Yeah, up, down, but over a couple months, it's gone nowhere. No great patterns there. We already looked at Microsoft. You look at some of the mega caps, since there's still a huge portion of the market. Google, in consolidation. Start to watch these things for either the breakout or breakdown play. That's going to tip the hat. So Google in consolidation, Apple in consolidation. Microsoft had the bullish pattern of them all. Amazon, consolidation. There's nothing. Watch either for the breakdown or the breakout plays in a bunch of these. Tesla's about the only Only thing that's been from a mega cap perspective that's just getting hammered. But if this finds a short-term bottom and can do a little rally in the year end, it could keep. It will take a downward catalyst out of the S&P and Nasdaq, which has been really weighing on it. All right. That's where we sit. And this is exactly why I will trade price action. I gave you my breakout levels. I gave you my breakdown levels. I don't need to try to call anything in consolidation. It's a fool's game. You're just going to get overall, besides minor day trading patterns, you can get chopped up if you're not good. So for longer term perspective, that's why I gave my key levels. For short term, yeah, if we had a double bottom tomorrow or a double top tomorrow or some other pattern, fantastic. But those can be over within a day. Yeah, if it wasn't for the FMOC today, it could have been one of those days. And this was very boring price action. We had a hell of a lot more price action from the CPI. We've had a lot of more price action on days where there was, So you want an early warning signal for anything? Now today's high and lows are going to be key for tomorrow. Yep, watch the replay, Dave. Thank you for being here. I will be back in the chair tomorrow morning. Everyone have a wonderful evening. Thank you for tuning in. Bye for now.